On January 1st, 2026, Decree 141 goes into effect, establishing a hard, unified baseline for microentities across Vietnam, 1 billion dong in annual revenue. Before this, the threshold sat at 500 million dong, a mark that created a deeply fractured compliance landscape for small businesses. To fix this, the new decree directly amends both Decree 68 and Decree 320, pulling their disparate policies up to align with this single 1 billion mark. While that 1 billion number is now unified, the actual mechanics of compliance diverge completely depending on the specific legal structure of the business. Tax practitioners have to separate two distinct legal entities in their minds: the business household and the formal enterprise. The business household archetype covers sole proprietors, family operations, and traditional street-level commerce. By contrast, the formal enterprise refers to incorporated corporate entities that operate within standard, heavily regulated frameworks. Here is where the paths split. For households, crossing that 1 billion mark triggers mandatory electronic invoice protocols. For enterprises, staying under that same 1 billion mark triggers a 100% corporate income tax exemption. Understanding this structural divergence is how tax accountants avoid compliance failures and secure targeted exemptions for their clients. Let's look at Article 1, which dictates the reality for the business household. This diagram shows how the threshold works. In the left column, if a household's annual revenue rises above 1 billion dong, the use of e-invoices, specifically those with a tax authority code or connected to a point-of-sale system, becomes strictly mandatory. If that household operates multiple physical storefronts, they cannot use separate tax codes. All distinct locations must share one unified tax code. However, despite sharing that central code, the business must annotate specific location codes on the shared e-invoices for tracking purposes. This creates a mid-year tripwire for growing operations. If a sub-threshold household crosses the 1 billion mark in the middle of the tax year, it immediately triggers a mandatory registration countdown. They have exactly 30 days from the end of the tax period where cumulative revenue exceeded 1 billion to register for the e-invoice system. For households, the 1 billion threshold acts entirely as an operational compliance trigger. It requires constant active revenue monitoring. Article 2 pivots completely to formal enterprises. Returning to our matrix, the right column shows the corporate policy. If an enterprise's annual revenue stays under the 1 billion line, it activates a 100% exemption from corporate income tax. To prevent accounting maneuvers, the decree enforces a strict definition of what constitutes revenue. The calculation requires adding gross sales from goods and services without any deductions, plus financial revenue, plus any other income. If an enterprise operated for less than 12 months in the prior year, a proration rule takes effect. The math works like this. Take the actual revenue, divide it by the active months, and multiply by 12 to project a full year equivalent. There is a caveat for partial months. Any fraction of a month operated, whether due to a merger, a split, or new registration, counts as a full month in that denominator. This strict mathematical extrapolation prevents newly formed companies from exploiting a short-term, seasonal sales spike to falsely claim the microentity exemption. The decree also includes a provisional tax safe harbor, specifically designed to protect newly registered startups. Startups that project under 1 billion dong in total revenue for their first year are completely exempt from making quarterly provisional corporate tax payments. If their actual clause is in place to stop large parent company does not also qualify under the 1 billion limit. The exemption is strictly ring-fenced for independent micro-enterprises. It neutralizes attempts to use corporate restructuring to dodge tax liabilities. Article 4 dictates the specific implementation protocols, bridging late 2025 into early 2026. First, it outlines immediate retroactive relief for business households. Households earning under 1 billion that already self-assessed and paid taxes under the old 500 million rule are now legally eligible to have those funds refunded or reclassified as tax offsets. On the corporate side, the decree addresses the handling of Q1 2026 provisional prepayments. Eligible micro-enterprises that proactively paid those Q1 provisional taxes can have those funds officially reclassified as overpaid tax. That overpayment can then be utilized to offset immediate future tax liabilities, or it can be refunded directly to the enterprise's bank accounts. These transitional clauses represent immediate cash flow injections for qualifying entities right at the start of the new year. The most mathematically complex transition scenario involves enterprises with a 2025 tax year that ends after the January 1st, 2026 effective date. As shown on this timeline, the new exemption only applies to the specific portion of the fiscal year that falls within the 2026 calendar year. To process the 2025 return, execute a two-step formula. Step 1. Divide the total 2025 tax liability by 12 to establish a flat monthly rate. Step 2. Multiply that monthly rate by the months falling into 2026. This yields the final exempted amount. Executing this specific mathematical formula is mandatory for all off-cycle fiscal year filers to remain legally compliant during the crossover period. Bringing both the household and enterprise rules together leaves us with a clear set of professional directives. Auditors, CFOs, and accountants need to immediately audit their entire client portfolios against the new 1 billion dong threshold. For enterprise clients, the immediate action is to halt any unnecessary Q1 2026 provisional payments and begin filing for the available offsets. For household clients, practitioners must institute strict monthly revenue tracking to ensure those clients do not blindly trip the 30-day e-invoice registration deadline mid-year. Decisive, Decree 141 requires a proactive reassessment of micro-business compliance strategy from the ground up.